Hey everybody, it's Matty here with Altcoin Buzz, and today we're looking at a bit of a different kind of piece in this video. We're looking at the FUD. So let me preface all of this, everything that we're going to explore right now, by saying that, look, we're all part of the same cryptocurrency community, and we have the good, the bad, and the ugly that we all deal with in this space. So, full disclosure, at Altcoin Buzz, we try to keep things simple and try not to take sides as much as possible. We try to be impartial and usually believe that there will be some new people trying to find out about crypto, and we just want to make things easier for them when they're trying to get an overview of the space. There's a lot of newbies entering the space all the time. There's nothing wrong with that. So very often we talk about things with a very positive tone, sometimes through rose-colored glasses, and that's all, very well and good, and there's good stuff happening. But we need also to be honest about some of the red flags in the space. So potential issues, about problems that we're all facing, whether they be, as far as tech goes, business, marketing, regulation, adoption, use cases. Sometimes there are economic problems, distribution issues. And we're letting you guys know that for all of these issues that do come up, yes, there are people and there are teams and intelligent teams working towards improving and providing solutions. But for the most part, this is a space without standardization. All of the people following us eventually are going to be OGs in this space, right? And hopefully future millionaires and crypto educators. And with that mindset at the forefront, we do try to cover exciting and interesting topics, regardless of whether or not we are, invested in them, because it really does give us a lot of understanding and allows us to make better decisions in the future. And the more of those decisions we make, the more confident we are in our ability to make those decisions. So with all that being said, we're going to take a look at today's snapshot at some of the reasons that there is FUD in this space, some of the issues that exist in cryptocurrency, at least at the time of this recording. Before going any further, guys, I do want to remind you that for every day in March, every video that we have put out, we are also giving out one Doe Harris shard collectible to the individual with the best comment for the video, as long as they also include their wallet address to receive that collectible. This goes back to the 1st of March, so you can go back and check out some of our earlier videos. If they do not yet have comments with wallet addresses, hey, lucky you, because that's your chance to post a comment and claim your shard, your collectible for that day. Again, giving away one for every day, every video that we put out in the month of March until the 31st of March. Winners will be announced on the 5th of April, 2019. Okay, so with all of that being said, let's take a look at some of these more negative, more ominous stories that are causing concern for some things that analysts are pointing out. We're revisiting some of the FUD in the Bitcoin and cryptocurrency and blockchain space, beginning with this article on newsbtc.com. Bitcoin in longest uptrend of current bear market, so that's good. However, but analysts expect new lows. Bullish momentum is struggling with the key resistance of $3,900 for Bitcoin, and crypto analysts are calling for a break to new lows and trading zone before the bear market is truly over. As was pointed out by crypto chartist and analyst Dave the Wave, who is known for watching long-term indicators such as the weekly MACD, Bitcoin has been trending upward ever since the cryptocurrency bounced off the local low of 3,400 on the 6th of February 2019. So that's 2 months of an upward trend, more than 2 months. That's pretty good. But despite that relative snapshot of good news, people are still, based on all kinds of technical indicators, are suggesting that we may have further to fall, and that, perhaps we have not yet hit the lows that are required to truly slingshot back up to new all-time highs. In this piece, we're having a similar coverage here, a similar perspective on ambcrypto.com. Bitcoin price analysis. Bears feed on fallen coin as bulls abandon market. That's a little harsh and maybe hyperbolic, but article here from the 12th of March. Bitcoin has been going through a consistently evolving bear market. At press time, Bitcoin's price was $3,900 with a market cap of $69 billion, and we saw a rise of 3.76% over the last 7 days. However, as pointed out previously, the 3,900 price mark seems to be presenting pretty significant resistance. The coin traced resistance at $3,909.47. And here's a breakdown at some of the technical parameters being observed in the space. The Bollinger Bands appear to be converged, decreasing the volatility in the market. The moving average line was above the candlesticks and indicated a bearish market. Awesome Oscillator also marked a weakened bearish trend as the markets were red, and the Chaikin money flow indicated a bearish market for the token as the marker was under the zero line. If you're really into technical analysis, you could take a look at some of these other trends as well and these other indicators, including parabolic SAR, the MACD, and the RSI, the relative strength index. But as the author concludes, according to the indicators from the 1 day and 1 hour chart, a bearish trend was forecast for the largest cryptocurrency, i.e. Bitcoin. And more FUD here on newsbtc.com. This analyst is saying the crypto markets will plunge after Bitcoin begins making bigger moves. So Bitcoin has continued to struggle to break the $4,000 price level, which has proven to be a strong level of resistance that will require a significant influx of buying pressure to break decisively above. Matty Greenspan, who's an analyst at eToro, had the following to say. Well, you may remember that we talked about him recently. So, quote, global volume across crypto exchanges is holding steady at around $30 billion per day, yet Bitcoin's volume is less than a third of that figure. Sure, Bitcoin exchange volumes are still about double what they were in early February, but some coins like Litecoin, EOS, and Binance Coin have more than tripled their daily volumes in the same time frame. And he also said that Bitcoin's declining trading volume is, quote, very telling of the current market conditions. Moving away from the technical charts now for a second, we have this MIT tech review that's quoting a somewhat discouraging line here. Cryptocurrency, one of the worst technologies of the 21st century, blockchain revolutionary. What's up with this? We're on blockmanity.com, and MIT's premier publication, the Technology Review, has taken out a list of the top 10 worst technologies invented in the 21st century. Unfortunately, cryptocurrencies have made it into the list, but Technology Review hails the blockchain, underlying technology behind cryptocurrency, as revolutionary. Interesting. So they seem to like blockchain, but as far as cryptocurrencies go, they said, quote, so far cryptocurrency looks mainly like a way for a handful of speculators to get very rich, while a lot of other people end up poorer. So there seem to be a whole bunch of technologies that have been labeled in this list of the top 10 worst. They are at number 1, the Segway, 2, Google Glass, 3, electronic voting machines. I might agree with that. Number 4, 1 laptop per child, 5, CRISPR babies, data trafficking, cryptocurrency at number 7, e-cigarettes, and selfie sticks. And on ForbesIndia.com, we have this article, I see no practical use for cryptocurrency. Paul R Brody, and Brody is EY's Ernst & Young's global innovation leader for blockchain. He spoke exclusively to Forbes India about the unrealistic expectations of blockchain tech and why it's probably the most boring revolution ever. So Brody said that one key factor, not just in India, but around the world, is that people have unrealistic expectations about how quickly a technology like blockchain will be adopted. Unlike consumer internet applications, enterprise systems are adopted very slowly. Consumers don't usually spend much time thinking about system integration or security issues, and they're individually empowered to sign up for new services. You can read more about Brody's opinion here on this page, which we'll link to in the description below. Strikes me as an odd opinion for the head of the blockchain division to hold. Nevertheless, this is what he said according to his exchange with Forbes. We touched on this yesterday from another perspective, but if you want to read about it on verdict.co.uk, global cryptocurrency market to hit $6.7 billion by 2025. The global cryptocurrency market was valued at $574 million as of 2017, but it's expected to achieve a compound annual growth rate, a CAGR, of 31.4% between that year and 2025, bringing it to $6.7 billion. If you want to read more about this, again, we covered it in our last news piece, but you can check it out in more detail here if you please. More FUD here on BloombergLaw.com with this article, client cryptocurrency payments may pose ethical risks for lawyers. Article from March 11th. So law firms are increasingly accepting cryptocurrency as payment, but there are potential risks, including how federal regulators view it, ethics lawyers warn. So despite the risk and volatility associated with crypto markets, law firms, including the big law players, appear to be accepting cryptocurrency as payment for services more and more. And then you have Matthew K. Roskowski, Deputy General Counsel for Latham & Watkins, and one of the panelists said lawyers in general may want to accept cryptocurrency to show, quote, we're hip and cool and on top of stuff. He said that despite cryptocurrency's downsides, lawyers are in the client service business. So if a client asks for the option, attorneys may dive in. But there are two risks, according to this author, that are worth considering. One is that cryptocurrency is supposed to be appreciating in value over time, unlike cash. So lawyers who accept it from clients may decide they don't want to spend or liquidate it. So if cryptocurrency is accepted as a retainer, which is money that's placed into a trust and is client money until earned by the lawyer, the situation gets trickier if the value of that cryptocurrency changes with time. Quote, cryptocurrency does not fit with the model for trust funds. Lawyers should not accept cryptocurrency as trust money, said Roskowski. The second issue is that, at least in the eyes of the IRS, cryptocurrency is property, not actual currency. And there are legal parameters, apparently, that require lawyers to safeguard client property, which is a category that cryptocurrency would thus fall under. So I'm sure we have some lawyers out there in the altcoin buzz army. Let us know if these are variables that are actually cause for concern. Do you think that the law firms are smart to be pursuing payments in cryptocurrencies, or are these legitimate issues that need to be dealt with? Let us know in the comments below your thoughts and opinions. In other news here on news.bitcoin.com, Texas representative wants to ban the anonymous use of cryptocurrency, so more FUD. A Republican member of the Texas House of Representatives, Phil Stevenson, has just introduced a bill that would require residents of the state to identify themselves if they wish to use cryptocurrencies. House Bill number 4371 details that individuals who spend and receive digital currencies must be known. Although, if the user happens to use a, quote, verified identity digital currency, then they don't have to submit verification to the state. So effectively, this bill is all about identity and, I guess, know your customer policies in a sense. So House Bill number 4371 further states, quote, Texas may not use digital currency that is not a verified identity digital currency. The Texas Department of Banking, Credit Union Commission, Texas Department of Public Safety, and State Securities Board shall collaborate to encourage the use of verified identity digital currencies. If you want to read more about this, maybe you're a Texan, maybe you be affected by this type of legislature, let us know in the comments below. I think this would quite reasonably rub a lot of people the wrong way. I mean, the big appeal of cryptocurrency, as is discussed here, is the anonymity of the whole medium in the first place, and that is a major selling point for so many of us. So interesting article here. Let's keep an eye on the bill, especially going forward, and see if it garners enough support to pass. But there you have it. And finally today, in the world of FUD news, we're on thenextweb.com. Problem gamblers more likely to obsessively trade cryptocurrency, research finds. I guess this kind of applies to me, to be honest. I'm not a problem gambler. In fact, I don't gamble at all. But I do have an obsessive and an addictive personality, so I find myself trading quite a bit. A new study has linked cryptocurrency trading obsession with problematic gambling. Those who bet too regularly are at an elevated risk of trading cryptocurrency more frequently. So this is a study that surveyed 876 adults who had gambled at least monthly and found that 50% of the participants had traded cryptocurrency over the past year. Additionally, over 75% of high-risk stock traders also traded cryptocurrency. This, the research concludes, is likely due to their impulsivity and belief that they can beat or outsmart the fledgling cryptocurrency market. So the lead author of the study makes a pretty important distinction here. Quote, for some people, trading cryptocurrencies is seen as an investment opportunity. And that's how I see it personally. But Devin continues, there is an alarming proportion of people who are gambling on these cryptocurrency markets as they would gamble on horses or sports or slots, and it has the potential to get them into significant trouble. As you know, we never offer financial advice, but certainly our recommendation is to only trade responsibly, to never gamble when it comes to this market, to never spend or invest more money than you can afford to lose. And whether it's cryptocurrency or any other asset, guys, be responsible with your wealth and with your investments. Don't leave it up to chance. Here are some of the signs of addiction to trading digital currencies. If you're spending a great deal of time on the activity, if you run into debts and financial problems, if you're lying to friends and families about those activities and problems, mood swings, feelings of hopelessness, depression, anxiety leading to physical symptoms, unrealistic views such as being lucky, chasing losses, and attempting to control activity without success. Don't fall into the trap of treating your cryptocurrency investments as gambling, everybody. We implore you to be responsible, be prudent, invest wisely, and above all, only invest what you can afford to lose. Although, caveat, as you know, none of that is financial advice. All right, so that about wraps up all the FUD I can tolerate. On to more important and positive things in our next piece. Don't forget to leave your comment below as well as your address if you want a chance to win our latest Ser Ether Night collectible. And that goes for every video in the month of March up until the 31st. Winners will be announced on the 5th of April. Check out our website, guys, altcoinbuzz.io. Go ahead, like, subscribe, share, smash the thumbs up, and hit the bell to receive notifications. Check out our last videos if you have not already. And best of luck if you choose to invest. Don't be a gambler in it, though. And as always, we do hope to see you again soon in our next video. Take care.